indicators, how to trust them, how to recognize advantages, and how to turn those advantages into potential entries, understanding where your potential exits should be. Guys, and this is what we're going to do today. We're going to do this every day for the rest of your lives until you're so good at it you just can't stand yourself. So good morning and welcome. Happy Monday. It's 9 a.m. Sometimes I wake up and I just look at the software and I scroll backwards, and I look at the trades, look what I did last week and try to be better this week. And I look at things that work well for me, right? I look for things that don't work well, guys. And it's consistent. It's consistent every day is what I've found. The rules create advantages. The advantages should be what gets you into the market, guys. And that's what we're going to talk about today. I'm pretty excited about it. It's Monday. But before we do anything, we're going to go through our routine, right? Systems and routines. That's my thing. That's my happy place. Let's go to Forex Factory, guys. Let's make sure that we're not trading in any news. Today is Monday, June 5th. And at 9:45 a.m., guys, we're going to have what's considered low impact news. Final services, PMI. The expectation isn't that it's going to be a complete market mover to make it act violently or unpredictable. But at 10 a.m., you're going to see that we do have a high impact expected. What does that mean? That means that if the market is going up in the moment news releases, it may drop sharply. It means that if the market is moving in a very easy speed, it may go violent. We're not concerned so much about what the ISM services PMI means. What we're looking for here is just that little heads up, that advanced warning. Hey, guess what, Mark? The market may move a little bit violent here. You need to make a decision on whether or not you want to be a part of that violence. And guys, as a general rule of thumb, I don't want to be a part of that. I want these guys to react, and then I'll get in when it settles down. So Monday, June 5th, that's what we have going on. A little bit of news. I like to write down on a piece of paper 10 a.m. news. I like to set an alarm with Siri, maybe at 9:55. Hey, Mark, don't forget there's news. Go toast a bagel, right? Go make a waffle. Pour a glass of OJ, pet the dog behind the ear. Do whatever makes you happy. But sometimes avoiding that freight train of emotion is a good thing. And then everything that I talk about, guys, each and every day, day in and day out, comes from the education page. I can't stress enough that there really are no secrets with Nexgen. Whoops. Discord's got a case of the Mondays. Just booted me out. I'll be right back. Nobody panic. Speaking to you from the great beyond. But here I come. Can't shake me, Discord. Everybody have a good weekend? Did you guys study a little bit this weekend? Did you practice? Did you look at your trades from the week and go, man, I'm pretty darn smart. Have you met me? I hope you did. I hope you guys spent some time. Can everybody hear me just fine? I hope. It looks like I'm unmuted. I see my screen. Cool. Thanks, Alan. I always have that moment of panic where I'm like, crap, nobody can hear me. Guys, let's talk about the plan for the first hour. It's the same hour that we do every week, right? It's just kind of reinforcing the rules and understanding the advantages that the rules present. And guys, these aren't all the rules. These are the rules for a high probability trend trade. These are the rules for a trade that typically wins 70 to 80% of the time. These are the rules that provide a statistical advantage each and every time you get into the market. Guys, these are rules that become easy to recognize really within a couple days if you stay singularly focused on this high probability trend trade, on this trade where every indicator on every chart agrees for the trade. What you're doing is you're creating this foundation, right? You're creating this foundation that gives you a trading plan capable of winning more than it loses. If you're not winning more than you lose, guys. This is a great thing to kind of, I don't even want to use the word regress, to refocus on. Um, Learn to win simple, right? Learn to win easy. Learn to win with stacked advantages. And then if you want to start adding charts, if you want to start adding trades, if you want to start adding conditions, no worries, but make sure that that solid foundation is present. Guys, this high probability trend trade is going to teach you to read your charts. And chart reading is 90% of what you're going to do throughout the day. If you've spent any time with me in this classroom, you know that there's going to be periods where you're sitting on your hands and you're waiting for advantages, right? 90% of the time you're reading your indicators, you're taking that information, you are creating this fluent understanding of where the market is likely to continue, where it's likely to go, and where it's likely to stop. We're going to use those continuation points for entries for your highest probability trend trade. We're going to use those areas where the market is likely to stop to keep us from trading into areas that may reverse the market, that may create big violent bounces. And then we're going to use those areas where the market is likely to go as profit targets. And guys, one of the coolest things is if I open up one chart right now, we have great examples of that. On this one chart on crude oil, and we'll go through it, we could anticipate this blue line as an area where the market is likely to stop, and if there was a trade in progress, we had a great profit target. We could identify this tail as a place where the market is likely to continue per the rules, and if we took this entry, there was a great amount of profit. And then we had where the market is likely to stop. And this is what we call a termination condition, guys. And these termination conditions happen throughout the day. They're going to keep you from taking trades into areas that may reverse the market, but they're also going to serve as an anchor for this trade, for this high probability trend trade. Guys, and a high probability trend trade that happens after a termination condition on the 13-2 is that trade that typically wins 70 to 80%. This trade has only 3 rules, and these 3 rules create what I like to call the recipe for a trade. And a trade is nothing more than momentum, a clear path, and an entry area. And when you have these 3 advantages present, guys, you're going to develop trust in these rules through repetition, through study, and that's when that 10% comes in, when the rules are met. And these 3 rules happen on only 2 charts, right? Simplicity. I don't know about you guys, but I fancy myself to be a pretty smart guy. And because I do, I like to overthink things, right? I like to add rules. If this is really smart, can't I make it smarter? Guys, it's human nature. Allow yourself to be brand new. Pretend like you know absolutely nothing. And stay focused on these 3 things on 2 charts. You're going to use a large chart. And your large chart is going to define direction. If the background on your large chart is green, here we go, let's pull a picture up. If the background on your large chart is green, you're in an uptrend. And if you're in an uptrend, guys, your brain should only be thinking, I'm looking for rules to be met for high probability trend trades long. If the background on your large chart is red, you're in a downtrend. And you should only be looking for rules to be met for high probability trend trade short, guys. Trading with the trend is the first advantage that you're going to provide yourself, not fighting that overall trend of the market. And there's a little note on there. If you never fought the trend, how many mistakes would it eliminate? I like it if you guys answer that question in your head, right? Large chart is going to determine momentum, making sure that the market is likely to continue in the direction of that trend that you established through the background color. That momentum comes from rule number 1. Your first rule of 3 is going to define and determine the momentum of the market. It is going to identify that advantageous condition when it is easiest for us to look for that area where the market is likely to continue. And your large chart is going to define areas. It's going to make sure that we have that second advantage, that clear path, when there's absolutely nothing in the way as the market's going up or down. And all of this happens on the large chart, that broad stroke of a brush, guys. It's going to show the overall opinion of the market. And I like to show this picture. Using the 2 chart setup, asking yourself, who are you trading with? Who are you trading against? Your big charts are going to define the areas and the direction. The large chart size reflects the large crowd opinions in the market, right? And the large crowd typically wins, guys. Your small chart is what's going to force a pullback, is what's going to get us to that best of the best entry. But we're not going to worry about that entry until we have the first two advantages from the large chart, that momentum and a clear path. And when we do, we go to the small chart. We begin to embrace the opinions of the smaller crowd because they're going to fight the overall trend and push us right back to that perfect entry. And you're going to be able to pinpoint where the market is likely to continue by refining that broad stroke of a brush, pinpointing that area. It's going to allow you to reduce your risk, increase your profit potential, guys. And that's your rule number 3. Rule number 3 happening on the small chart when that equation is put together. So we're going to go through and we're going to take a look at this. We're going to use live market examples of odds favorable momentum, termination conditions, and then we're also going to learn to embrace and recognize how to get in once those conditions are there. And I'm going to go to the tutorial section straight from the education page, and you're going to have everything that you need to be successful. Anything that you could need for this highest probability trend trade is put and laid out for you. And everything starts with the T3 trigger lines, guys. The T3 trigger lines are going to first define trend. When the smaller, faster triggers, these solid lines, break above the larger, slower trigger lines, small triggers, large triggers, the background paints green and it lets you know, hey, it's time to look for rules to be met for high probability trend trades long. When the smalls break below the large triggers, that background paints red. It keeps you looking only for the rules to be met for high probability trend trade short. And guys, you're following that trend because rule number 1 says that we must have strong trigger lines. And strong trigger lines are defined in an uptrend when the small triggers are crossed up, when they're above the large triggers that are also crossed up in the direction of the trend. And the space created between the two, guys, this is a momentum phase. This is when the market has the absolute most momentum. The odds are favorable for the market to continue in the direction of the trade or the direction of the trend. So we kind of splice these two together and we're just going to call it odds favorable momentum. You may even annotate it, OFM. Let this be the precursor for looking for a trade. Let this be what gets you looking for that next rule. When the smalls are above the large, the space created between the two means that we're in a momentum phase. That momentum phase is the perfect look for buying a pullback to a Fibonacci area on the smaller, faster chart, guys. So odds favorable momentum means that we have strong triggers. Strong triggers give us that first advantage. In a downtrend, you see it as well. Smalls outside of the large are wide, they're angled in the direction of the trend. It is the space between the two that lets you know that that momentum phase is its absolute strongest. And if you commit to this look initially, it's going to carry you a little bit. Maybe if you break another rule, maybe if you make a mistake, when you have that advantageous momentum, the market tends to push in the direction of the trend. When those small trigger lines return inside of the large trigger lines, we call this a weakening of the large triggers. I like to call them anything can happen triggers because anything can happen up or down. You've lost that advantage of momentum. You're no longer in the momentum phase on the trigger lines. And guys, these anything can happen triggers are a pretty good indication that the market may reverse, right? Losing that advantage. So during the course of the day, guys, I take this picture because it shows you a span of about 12 hours where you see anything can happen triggers. This is all overnight, which is why it's such a big gap. You're going to see these anything can happen triggers. The momentum wanes, the market reverses. It provides odds favorable momentum. There's one of those pullbacks, those tails on the 13.2, and the market continues up all the way until those triggers get weak and it reverses once again. So a little bit of patience. 90% of what we do during the day is just waiting for those advantages. And the advantage starts with odds favorable momentum, guys. Is everybody okay with that? I got 36 of you in here. I know some of you are probably new. Some of you are coming back looking for consistency. Give me a Y in the room. Odds favorable momentum, guys. Let it set the tone. You'll be amazed at how much easier your trading is if you just commit to this one look. Once you have that momentum, those strong trigger lines on the 13.2, guys, we have to make sure that there's no termination conditions, right? No areas that may reverse the market. So we have to be able to define them. We have to be able to identify them, and it's really not a difficult task. Let's define them first. A termination condition is a Fibonacci-based indicator that may reverse the market, and it's based on a comparison of those T3 trigger lines and the areas that are being reached. What are your areas? Let's look at them visually. I think visually it helps a little bit, right? It can be a divergence high. It can be a divergence low. And guys, a divergence means that there was a loss of momentum when a pivot was created. When the market was going down, your bars were going down, everything was red, but then it went up. This is what we call a pivot, when the market goes from down to up or up to down. When there's a loss of momentum, meaning that the momentum of the market isn't following price, this is calculated behind the scenes, guys. You don't have to do any math. You don't have to do any equations, no comparisons. This divergence line will print from a low, or this magenta line will print from a high. These areas, these lines that are formed when the market comes back to them may reverse the market, may terminate the trend. We're also looking at red Fibonacci resistance, blue Fibonacci support, and these yellow one-to-ones. And let me give you this picture, guys. I share a lot of pictures in the room. Feel free to steal them. Please steal them, actually. So termination conditions are areas that may reverse the market, right? And it's a simple comparison, guys. I'm going to show you the comparison. Two things have to happen. The first thing is that price reaches an area. Those dynamic Renko bars, you can see that the market's in a downtrend here. Everything is red, the bars are red, and in the bottom right-hand corner of the screen, those bars come in contact with support. This is the first part of recognizing a termination condition. The second part is really pretty simple. All you have to do is ask yourself, where are the trigger lines? If no trigger lines break through this area of support, guys, you've reached a termination condition. Because you've reached a termination condition, rule number 2 is not true, and you do not have the advantage of a clear path. So it's your job as a new user to just go, well, my rules aren't met. I'm going to sit on my hands and I'm going to wait for those rules to be met. Even with momentum, without the advantage of a clear path, the likelihood of success goes down. So simple two-part process, guys, and I always encourage people to write this down. It starts with price reaching an area, and then just ask yourself, where are the triggers? If the triggers remain above support, support's likely to hold. You've reached a termination condition, and there's absolutely no reason to hope that it breaks. And we see this here off of support. Price reaches one-to-ones. All of the trigger lines remain above. No more short trades into the area, guys. This is an area that's likely to stop the market. It may reverse the market. Price reaches support. Triggers remain above. No more trades because rule number 2 isn't met. You do not have the advantage of a clear path. Guys, here's one of those divergence ones coming in. The pivot is formed. The market loses momentum and this line prints to the right. This is not a termination condition because the first part of that equation isn't true. Price didn't reach this area. Price created this area. But when price comes back to that divergence low, now it's a termination conditions because the trigger lines remained above. Guys, this is what we call a pivot stop out. Here is your pivot, and here is your stop out. Price exceeding by a couple ticks and then going the other direction. Guys, this is a very powerful termination condition. Becomes even more powerful when it coincides with Fibonacci support or Fibonacci resistance. And then going up to the highs, right? Market goes up and down. We're going to make money both ways. Termination conditions at a high. Price reaches the area. Guys, there's another one of those pivots, not a termination. But when price reaches the area and the trigger lines remain below, Now I have a termination condition. Now I have an area that may reverse the market, and sure enough, it does. Price reaches resistance, no trigger lines break, no more long trades into that area. Rule number 2 isn't met. Price reaches one-to-ones and resistance, right? No more trades into the area because the trigger lines remain below. This divergence isn't a termination condition. This divergence means that there was a loss of momentum at the key area, only adding strength to the likelihood of that area holding or creating a pretty big bounce that's not tradable. Guys, is everybody comfortable with the basic idea? Price reaches an area, no trigger lines break through, no trades into the area, you don't have a clear path. Guys, this is something that happens quite often. And let's take a look at just how many since midnight. Price reaches an area, no trigger lines break through, the market continues up, right? Doesn't make a key area, and it pulls all the way back to one-to-ones. Price reaches it, triggers remain above, and then it finishes the move up to the key area, guys. Price comes all the way down to support, to the tick, once again. Guys, these are areas that may stop, that may reverse, right? That may be problematic. No clear path. And what it means is that you've got to be patient. We're going to look for our opportunities in between these termination conditions, these areas where the market is likely to stop, these areas where the market is likely to go. And guys, you're going to look for opportunities in that momentum phase, and you're going to see those tails print on the 13-2 after the fact potential entries. Everybody good with that one? I know everybody likes to say yes on the first item. Guys, if you're not consistent, if you're struggling, if you find yourself losing more than you win, this is a key concept. Avoiding those termination conditions, giving yourself the advantage of a clear path. These are all areas where the market is likely to stop, guys. When do you have the clear path? When both the small and the large triggers get through an area, then we have a clear path. So this one kind of gives you 3 scenarios. Let's just break it down into 2 scenarios, right? Let's keep it simple. No triggers through, absolutely no clear path. Rule number 2 is not met, no trade to be had. Both the small and the large break through this area of resistance. Now the area is considered broken. Now you have a clear path, guys. For an area to be broken, both the small and the large triggers must be through the area. I'm going to type that in the room for you. Small and large break through, and there we see it's in the momentum phase, and there's one of those tails, one of those potential entries on the 5-1. Guys, rules 1 and 2 are both met. Momentum, clear path. And I like to once again ask the question, what if you insisted on a clear path? What if you told yourself the only way I'm going to take a trade is if there's nothing in my way? Right? Would it make your trading more profitable? Ask yourself the question. Answer it honestly. It's going to help you. And then there's one more look that you're going to find, guys. There's going to be a look that we call a 50-50 look, and it has absolutely nothing to do with the potential to win or the likelihood of loss. And what a 50-50 trade is, what a 50-50 look is, let me find my picture, sorry. It simply means that 50% of your trigger lines have broken above the area, have broken below the area, and 50% have remained on the other side of that line, right? Small triggers are going to go through first, especially with odds favorable momentum. When you have odds favorable momentum, guys, when your small triggers get through an area, whether it's a low or a high, whether it's a fib or one-to-ones or a divergence high, that area has the potential to break, right? And areas will break, and strong triggers typically are required to break them. But it's not a clear path yet. Rule number 2 isn't met. This is a scenario, these 50-50 styles, where the smalls are through and the large are not, guys. This isn't a deal breaker for trades. This will be probably your first medium probability trade. Remember, we're talking about the high probability right now, which requires a clear path, 100%. When you build that foundation with a high probability trend trade, when you learn to read your charts and you can understand fluently where the market is likely to continue, where it's likely to stop, where it's likely to go, you're going to work yourself into what we call a medium probability trade, guys. You're not bound to this highest probability trade for the rest of your life. You certainly can. I've had people do it, be very successful. But the human brain needs activity, right? A medium probability trade means that most of your indicators line up for a trade, however a small issue exists. Your ability to read charts is going to have you identifying that small issue. On a 50-50 trade, that issue is an area that hasn't broken. It is not a clear path. And on a medium probability trade, this will probably be the vast majority of your trades. But when you execute them, you're going to have to take them and manage assertively, guys. Your chart reading is going to allow you to manage them assertively. If there's trouble in your way, perhaps the area that isn't broken, you may take a portion of your position off at that trouble spot, reduce risk to a zero loss level. Your chart reading is going to allow you to do that. I know that we're all excited to take more trades, right? I want to be in the market all the time. Guys, this is probably going to be your first one outside of those high probability trend trades. When you take a medium probability trade, when you take a 50-50 trade, it's imperative that you don't sacrifice any other advantages because you are giving up the advantage of a clear path. It's imperative that you have that momentum as well as the perfect entry area as you get into the trade. Is everybody comfortable with termination conditions? Price reaches, no triggers through, no trade. Both triggers through, the path is clear, look for the rules to be met. Only the smalls through with odds favorable momentum. It becomes a medium probability scenario. Guys, when those rules are met on the large chart, it's time to look for opportunities on the small chart. This is when we're going to refine the broad stroke of the brush. And this is when we're going to take a look on the smaller chart. Got some new pictures too. When we're in that momentum phase on the large triggers on the 13-2, when the smalls are above the large in this uptrend, the large are wide, they're angled in the direction of the trend. The odds are favorable for the market to continue in the direction of the trade or of the trend. Guys, when it looks like this, when we have a clear path, when we have odds favorable, we're going to look to the 5-1 and you're going to wait for the small triggers to weaken on the 5-1, right? You're going to anticipate a pullback. Rule number 3 says we're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. We are pinpointing where the market is likely to continue. When those trigger lines weaken, when a reversal bar prints, that pullback is beginning, guys. So we're going to start defining our trigger line conditions and entry areas. Do we have strong large triggers? We're looking for areas inside of favorable large triggers. And guys, favorable large triggers on your 5-1 chart are large, they're wide, they're angled in the direction of the trend, and they are overlapping one on top of the other because we're building a window of opportunity. We're creating and pinpointing that area where the market is likely to continue. And when it's inside of large and synthetics overlapping one another, it creates a very distinct advantage. It decreases the size of that window. So when everything is momentum up, right, on the 13-2 chart, smalls outside of the large, momentum phase up with the large triggers on the 5-1, guys, you're going to buy a pullback to the areas that line up inside of the large triggers. You'll notice that we have fibs, mid bands, 1-to-1s, large triggers coming up strong. You're going to be able to pinpoint this area, this window of opportunity, and you're going to be waiting for the market to come to you, to come back in this little pullback, that small crowd mentality. And if it pulls back to that 30, 79, 75 area, you're now in a trade. You've activated a limit order right at the top. Notice that it looks like a reversal bar potentially forming on the 13-2. But everything says up, right? Everything says strong. Direction is up. Momentum is up. Momentum is up. And you waited for this little pullback to the area inside of favorable large triggers, guys. This is your area. This is your window of opportunity. Let's slide this over to the 5-1. And it extends from your highest points of support inside of favorable large triggers to your lowest point of support inside of favorable large triggers. Guys, this is your window of opportunity, the area where the market is likely to continue. It's okay if the small triggers are down when both the 13.2 large and the 5-1 large are up in the momentum phase, guys. This little loss of momentum on the 5-1 gets you back to the best of the best spot. These areas inside of favorable large triggers act as a bounce point. And then once you're filled, your protective stop is going to go beyond the entry area, beyond the window of opportunity, at that place where the market should not go if this trade is going to be one of those 70 to 80% winners. Everybody good so far? Odds favorable momentum and no termination conditions. Wait for the reversal bar. At the time of the reversal bar, get your limit order at the highest point of support that's going to be inside of favorable large triggers. If the trade is filled, your initial stop goes outside of your window of opportunity, outside of those areas inside of favorable large triggers. See what the next picture is. And now you're in a long trade. When the market begins to move in the direction of the trade, you can reduce your risk. You're in this trade with the advantage of momentum. You're in this trade with the advantage of a clear path. And you're in this trade with the advantage of having entered the market at the area where it's most likely to continue. Guys, your recipe is complete. Your 90% chart reading has turned over to that 10% where we're actually taking a trade. And as your trade progresses, you must continually monitor the momentum and the trigger lines. Guys, entries are going to be your first goal as a brand new user. Entries are going to be your first goal as somebody coming back and looking for consistency, because great entries create manageable trades, guys. If everything stays up, right? The momentum and the trigger lines stay in the trade. The smalls are up, the large are up. Both are in the momentum phase, guys. You're looking for bigger targets. Momentum moves the market, likely to continue in the direction of the trend. And this is an instance where you get in with two, your risk is reduced. You're up $725 on two contracts at the time of this picture. And we're going to use Fibonacci to understand where the market is likely to go, guys. Red Fibonacci lines are great targets in long trades. Blue Fibonacci lines become great targets in short trades. And if the momentum on your largest chart supports the trade, if the momentum on your smallest chart supports the trade, you can begin holding for larger targets. Guys, this is an example of over $1,100 on a two lot from the highest probability trend trade, right? From every advantage, getting in, taking care of it. And I took a picture on this same trade and why we focus on the best of the best. And I'm looking to see where I put that picture. Son of a gun. I'm going to find it. We're going to take this trade, guys. There it is. We'll just do it like this. And this is one of the reasons why I encourage simple, easy, high probability, two charts, right? Three advantages. Because that same 1187.50 on two contracts is 11,875 on 20 contracts. The entry is the same. The exits are the same. The advantages are the same. The conditions are the same. The only thing that changes is the number of contracts being traded, guys. It takes the same time to execute. The only difference is the number of contracts that you're going to trade. Guys, is everybody comfortable, at least in foundation, on the highest probability trend trade? That trade where every indicator on every chart agrees for the trade, giving you the best chance of success. This is a trade that typically wins 70 to 80% of the time when the rules are met. Guys, this is a trade that I'm going to provide you a checklist for right now. These are the conditions of that high probability trend trade. They're identified and written out in the form of a checklist. Guys, if you print this out, I'm going to give it to you in the room right now. Put it on your desktop, right? Take a pen, take a pencil, take a crayon, take anything that you want to take. mud from the garden. But if you can mark yes on each and every one of these, you're going to find yourself in a trade with every advantage on every chart, right? With an area inside of favorable large triggers where the market is likely to continue, with a clear path, with that momentum phase, that odds favorable momentum. David, it was kind of a remedial. We just kind of doubled it. But yeah, you're probably right. It's mathing. So I don't know. How about bad math gets you to 11,875, and then David, you're absolutely right. I guess 11's impressive enough with the bad math. 23 sure sounds better, doesn't it? Guys, little heads up. I was an English lit major. I don't do math that well. But I can read indicators, right? And I can take advantages. So 1 and 1, and this one shows 1, 2, 3. Yeah, it's a little bit different, but I think the point is, guys, you don't need more trades, right? You need better trades, more contracts. Does that make sense to everybody? You don't need more trades. You need better trades. Let those better trades, let those advantages be present, right? Give yourself the clear path. Give yourself the momentum. Give yourself that area inside of favorable large triggers. And whether you take it on a 1 lot or a 100 lot, it's still that high probability trade. The only thing that differs is the amount of money capable of making through contract changes. So I just put this checklist in there, guys. Get in the habit of using it. I've never had anybody use this checklist for a week straight and not do better than 70%, ever. So if you're not doing better than 70%, maybe take a step back, right? Simplify for a week. See what happens. This is that exact same checklist, guys, but I stole pictures from the materials. What is odds favorable momentum? Well, there it is defined perfectly in pictures, right? What is a termination condition? There it is defined perfectly in pictures. How do I find my window of opportunity? Where do my entries come from? Guys, there's a couple pictures. And then it even talks about, is the market coming from a good top or bottom? What is a good top or bottom? Well, a good top or bottom means that a termination condition created a full reversal in the market. And guys, this is your most basic, easiest form. When a termination condition creates a full reversal, we call it a strong top or bottom. Why? Because Fibonacci has reacted. Market conditions, price has reacted to this key area. You've been able to change trends. You've been able to change momentum. Guys, good tops and bottoms are the precursor for that highest probability trend trade. When you're coming from a termination that creates a full reversal, looking for that absolute best of the best trade, creates an advantage. 50-50 scenarios, right? When the smalls break through the area but the large don't, it's a 50-50. We don't consider this to be a strong top, even though it's at Fibonacci resistance, because the trigger lines break through. It requires those trigger lines not breaking through. And then again, if both of those small and large start to go through the area but the market reverses, this is not a strong top or bottom, guys. That first look, that best look, that termination that creates a full reversal, that's your highest chance of success afterwards. That's your strong top or bottom. And I should probably take that high probability trend trade checklist with the pictures on it, and maybe I'll change that picture right here for you guys. Nope, didn't work. I just doubled it up. I'll do that after class. So guys, you have your checklist, right? Follow it. Use it. Let that be your Bible. There is a pretty simple path to getting to where you want to be. And if you're new to my classroom, guys, I know we have quite a few of you in here. My first hour is dedicated solely to simplicity, right? It's getting you in a position to learn. It's getting you in a position to begin to recognize these advantages and take them and find those high probability trend trades, guys. And if you want to get to where you want to be, if you want to be a confident trader ASAP, there's a two-step process, guys, and it starts with posting pictures in the room. Every trade you take, post a picture. Just posting a picture isn't enough, though. I want you to tell me why you did what you did, right? Market must be not doing much because nobody's posted a trading class yet. Guys, define your rules. Did you have odds favorable? Did you have no termination conditions? Did you have an area inside of favorable large triggers? This is going to do a couple things for you. The first thing it's going to do is it's going to allow you to police yourself, right? You're going to be able to say, hey, look, I am following my rules. I did have these advantages present. This is a high probability trend trade. This is the trade that I'm obligated to take, that I'm committed to taking, that best entry, right? And there's another example going right to that Fibonacci resistance, using as a target. Ask yourself, how did you feel? Were you nervous? Were you excited? Were you anxious? There's a definite correspondence between how you feel and whether or not you're following rules. And then, guys, use your spreadsheet. Nexgen's provided you a spreadsheet. I'm going to pull up mine. Your first page, every time you take a trade, right? Every time you pull the trigger, put it in here. And there's little drop-down menus. What kind of menu or what kind of trade was it? Was it a trend trade? Have you gotten one of those medium probability, those 50-50 trades? Maybe you're going to that next level, right? That high volume area, trading off of those tops or bottoms. Or maybe you broke every rule and you want to remind yourself that. And you break those rules and you're going to put the picture of that trade right here, that annotated chart. How did you feel? Well, if you broke your rules, you might have felt a little jumpy. What was your condition? Did you have a strong top or bottom? Did you have those odds favorable momentum? Were you in that momentum phase on your 5-1 as well? Did you win? Did you lose? And then over here in the notes, type it in, put broke rules, right? Lost trade. And what you're going to do is you're going to start to recognize the conditions that are bringing you success. And you're also going to recognize the things that are taking you from success, right? You're going to recognize those patterns not only in the market, but also in yourself. And if you take 5 minutes every morning to study the previous day's trades, guys, this is such an important part of the study process. You're going to ask yourself, what worked yesterday when I pulled the trigger? What worked? Rules worked, right? Momentum worked. Clear path worked. Area for entry inside of favorable large triggers worked. What didn't work? Trading into those termination conditions, right? Maybe jumping in too soon, jumping out. What felt easy? What kept you relaxed? What kept those palms from getting sweaty or kept you from leaning forward into your monitor? And then what felt forced? What had you saying in the back of your head, man, I hope this goes. I know I'm doing it wrong, but I sure hope this goes. Guys, if you do this each morning, you're going to get to where you want to be a lot faster. You're going to take those pictures, you're going to post them in the room, you're going to track them in your spreadsheet. My job is to teach the rules for when it's okay to trade, right? I'm going to show you the advantage of momentum. I'm going to show you those clear paths. We're going to talk about it in your pictures. We're going to talk about it in the live market. We're going to use every resource known to man to make sure that you guys become comfortable for when it's okay to trade. Your job is going to be to simulate, right? To get in there, to take these trades, to annotate these charts, to write these rules, and post those pictures in class until you're sure that you're always taking the correct trades. One thing that happens a lot with new users, especially people that have never had access to a simulator, to a scenario with zero risk, is they begin to take the wrong trades, hoping to bump that P&L up, right? Looking for those big numbers. Well, I'll just trade 1,000 lot and I'll take a tick at a time and check it out. I just made $10 million on a Tuesday. Well, that doesn't translate into the real world. That doesn't translate into real money. So always following, always taking those correct rules. You're building muscle memory, guys. Don't practice the wrong trades. Simplify. We talk about one trade, right? What is it? It's a high probability trend trade. It's every indicator on every chart agrees for the trade. It's 3 simple rules, right? It's 2 simple charts. Simplify. What looks will you commit to? Guys, that's the second page of your spreadsheet. Every time you see a rules-based entry, take a picture, annotate the chart, put it into your spreadsheet. Guys, I have over 200 pictures of both high probability trend trade entries as well as medium probability trade entries, those 50-50 entries. I just put my spreadsheet in the room for you. I would be willing to bet dollars to donuts that if you're struggling with entries, you could click on each of these pictures, you could study it, you could look at it, and by the end of your session of clicking on 200 pictures, you're going to be so familiar with what that best of the best look is that you're probably not going to hesitate. And then you have the advantage of using market replay, guys. Going back at the end of the day, downloading the replay data, retrading the day, fixing your mistakes, right? Taking the trades that you should have taken, skipping the trades that you shouldn't have. You have the advantage of pausing the market and using your checklist and making sure that everything that you do follows rules. Guys, the idea of market replay isn't to see how much money you can make because you've memorized the market. The idea of market replay is to show you the potential of the methodology, right? When I follow these rules, what's the real potential? And then you study so that you can live up to that potential, guys. Take pictures of the correct trades, get them into your checklist and your spreadsheet. Repeat the process every day until you always take the correct trades. Guys, I'm here 15 hours every week, Monday through Friday, 15 hours to give you feedback, to tell you what you did right, to tell you what you did wrong, to celebrate the small victories, and to give you a nudge in the right direction when you need a little bit of help working on those rules, working on those looks. And then once you guarantee yourself you can win, guys, and how are you doing that? You're doing that on simulator. You're doing that by following rules, by always taking the correct trades. If the correct trades win 70 to 80% of the time, you should be guaranteeing yourself that you can win, that you can trade, that you're ready for live money. But there is still, Nexgen users, there is still no reason to put $5,000 to $10,000 into the market, right? I hope that I'm really good at what I'm doing. That's where these trading funds come in, guys, these prop funds. And if you follow them from the education page, they give Nexgen users a little bit of a discount there. But you can control up to $1 million for less than $500 a month. You can keep $25,000, the first $25,000, 90% of everything. Guys, these prop funds are where you can go through and really test your theory and see how you're doing. And then Jeremy just posted in the room. He said this one didn't work, but it looked good though. And we're going to take a look and we're going to see what happens. So, Jeremy, do you mind if I put it through the ringer? And guys, every time you show me a picture, I'm going to go ahead, and I know this seems crazy. Watch this. I'm going to take that highest probability trend trade checklist, and I'm just going to put it up against what you showed me, Jeremy. And let's start at the top. Is the market coming from a good top or bottom? How did we define a good top or bottom? Do you remember? A good top or bottom is going to be a termination condition that creates a full reversal, right? So when I look at these strong tops and bottoms, the first thing that has to happen is a termination condition. The second thing that has to happen is that full reversal. And a full reversal means that your large triggers have gone from red to green, from green to red. So, Jeremy, we have the termination condition, absolutely, right? But we never got that full reversal. We never got those large triggers turned. They remain red. You can see it on both charts. So I have to mark a no here. I had the termination condition, but I didn't have the full reversal. If I never got the full reversal, Jeremy, there's one thing that I can't have, and that's odds favorable momentum. If those large triggers aren't wide and angled in the direction of the trend, well, then I don't have large triggers. You can have a small trigger line that appears to be up and strong, but if they're not working together to create that momentum phase, then you don't have the advantage of momentum yet. You have the beginning, right? You're waiting for those large to catch up, but we don't have that odds favorable momentum just yet. They're still flat. They're not wide angled in the direction of the trend. Termination conditions not true is an absolutely. area inside of favorable large triggers. And then one more time, guys, simplicity is my saving grace. If it weren't for simplicity, my head would come unscrewed. When I'm talking about those areas inside of favorable large triggers, it means that both my large and my synthetic are strong. They're overlapping. They're in the direction of the trade. So, and this is cool, guys, because if you put it all together, Jeremy, you can't have favorable large triggers if you don't have wide large triggers on the 13-2, because your synthetics are the large. So if you don't have favorable large triggers, it means that you probably don't have odds favorable momentum. Does that make sense? So when we go to the recipe, right, if we go to what are we looking for to enter a trade on the most basic premise, we're looking for momentum and a clear path in an entry area. And Jeremy, we got 1 out of the 3 on this one, and a little bit of patience keeps you from hoping that this termination condition holds. I'm not saying that it's a bad trade, but I'm saying in its most remedial, break it down, use the checklist form, you forfeited a couple advantages. So thank you for sharing that. Because guys, this is what we do every day. We take a look at it, right? We analyze it. And as you grow with the software, so your rules might grow as well. And here's that same crude oil, right? And I've got a 21 fib there that you didn't seem to have. But see how those trigger lines never turned, right? Right down to support. And what we had, guys, was a little indecision. The market was pushing up, pulled back to support, termination condition to a termination condition, lost momentum, and only the small triggers came through. Large didn't. Ultimately, this market goes down. Great picture, Jeremy. I hope that helped a little bit. Guys, as you grow with the software, you're going to see things differently. And then Ron sees things a little differently. When Ron has odds favorable momentum and no termination conditions on his 13-2, he uses a little different approach. He looks for that entry with a smaller chart in a momentum phase. Yeah. Jeremy, what I found for myself, and guys, I try very hard. I don't ever want to tell you guys what to trade. I don't want to tell you how to trade. I want to help you recognize advantages. What I've found for me, Jeremy, and maybe some of you guys will identify with this, is almost to a board trader feels like rules met, right? Almost rolling, almost odds favorable, almost through the area. If you've been sitting on your hands for 30 minutes, a lot of traders go, well, that's good enough, right? So what I try to do in my own personal trading is only give myself two options: rules met, rules not met. If I annotate a chart, and let me just take a chart, right? And if I'm looking at a chart and I'm talking about maybe a trade that I took, and I'm going to say hypothetically that I went short right here, I might say, well, it wasn't odds favorable, and then I'm going to put that kiss of death on my chart. I'm going to say but, right? They didn't clear, but I think, I hope, I want, it seemed, may have, could have, might, right? I start using these key words in my annotation that let me know that I'm breaking my rules, but I really want to take that trade anyway, right? And then when I get run over because I didn't have odds favorable momentum, when I get run over because I'm coming from a termination condition, didn't have a clear path, there's two things that you can do, guys, and this is going to define how quickly you get to where you want to be. You can take this picture and you can post it in class, and you and I can have a conversation and get you headed the right direction, or you can hide it from me, right? Well, I don't want to show Mark this one. I broke my rules. Guys, hold yourself accountable. Allow me to hold you accountable. Ultimately, it's going to help you out in the long run. And it takes a little bit of courage, doesn't it? It takes a little bit of courage. Guys, there's that odds favorable momentum. There's one of those potential pullbacks. What did it look like over here? It's kind of ugly, wasn't it? It had a pullback to the area of support, then it went up and divergence prints and it pushes lower, and divergence prints and it pushes lower. And you can see on that smaller, faster chart all the indecision in the market until ultimately it goes right up to that key area, right where it's supposed to go. Guys, your rules might get you in. You may have to manage out, right? But waiting for those advantages, that 13.2 leads the way. It still goes up to that key area. And what do we see now? We see a termination condition that's creating a full reversal. Does everybody see that? Termination condition creates a full reversal. Full reversal has provided me odds favorable momentum. What do you recognize happening right now on the 13.2? Price reaches an area, right? Absolutely no trigger lines break through. This becomes an area likely to stop the market, guys. Right in the moment, it takes that long to recognize the termination condition. Rule number 1 is met. Rule number 2 is not. You're going to have to make the decision. Am I going to sit on my hands, right? Or am I going to take that trade anyway? In the very beginning, giving yourself the best of the best. Embrace. Wait till it's obvious. When is it obvious? It's obvious when all your charts agree, right? It's obvious when everything is green or everything is red. It's obvious when you have the strongest triggers. It's obvious when the path is clear. It's obvious when you have an area inside of favorable large triggers. Guys, if you keep it simple and mechanical, I'm going to share this with you too. This is my own personal, guys. This is my stuff that I want you guys to have. This is a simple trading plan, guys. Start off with the high probability trend trade, right? Start off with the absolute best of the best. Let your entries be mechanical, methodical, without opinion. Either the rules are met or it's not. This also talks about your stop logic. If you want to put in your range charts, right? Profit targets, trade management. Guys, this is a simple approach to getting in, but this is the one that I meant to open. This is the I am brand new. What should I be doing for the first 30 days? I'm not winning more than I'm losing. What's going to give me the highest advantage for the first 30 days? I am chasing trades and breaking rules. How do I refocus, guys? Simple plan for consistency. And this was written for me, for my personal trading. Guess what my challenge is? Sometimes I form opinions, guys. I fight the 13.2 direction, right? I fight the 13.2 triggers. So in my personal trading plan, I took a big fat font and I said, hey, don't do it. And guys, this is printed out on my desk every time. What does my perfect short entry look like? I've got a picture of it in my plan. My perfect short entry is strong triggers and no terminations and a pullback to an area inside of favorable large triggers. My perfect long trade is strong triggers, no terminations, pullback to the area inside of favorable large triggers, guys. I've defined my trade. I've defined my entry conditions. I have visualized what a short and a long should look like, and I've created a management plan to go with that highest probability trend trade that revolves around quick profits, right? If my first 30 days all I'm doing is worrying about entries, well, then I'm going to let management take care of itself. I'm not going to worry about going for home runs. I'm going to hit a bunch of base hits, guys. And then my second trade is that 50-50. That one area isn't broken. And I've got my perfect look for a 50-50. And when the smalls are through and the large are not and odds favorable, guys, my money's worth a perfect entry on the 5-1. No divergence, strong triggers, small window of opportunity. This is what it looks like to get me in a trade when the area hasn't been broken yet. If I give away one advantage, I won't give away the others. The smalls must be in the momentum phase outside of the large on the 5-1. No divergence. I want to come from a good top or bottom, from a termination that creates that full reversal. And I'll get in at the area. And if divergence prints, my rules say that there is no trade. Because it's a different trade, because it's a medium probability trade, I have to have a different management scenario for it. If divergence prints, I'll exit the trade. My first contract doesn't have a money denomination. It's getting off at the first trouble spot. Then I'm going break even, right? Quick profits on the second, reading my indicators. Guys, this entire plan takes less than 1 page. I put it in the room for you. Study it. News in 1 minute. Guys, we have ISM services happening in 1 minute. Here's your S&P. Went straight to the termination condition, right? News may make it react violently. It might make it unpredictable. So many of you are sitting on your hands. Guys, I'm going to take 5 minutes. This was the first hour. The first hour focuses on the highest probability trend trades. The first hour focuses on finding great entries, recognizing advantages, understanding that you're a chart reader, right? The second and third hours, we're going to watch the live market, but hopefully I'm going to be looking at your pictures. When the market isn't doing a lot, there's obviously less pictures. If you have a question, if you want to talk about a subject, let me know. We'll talk about it. I'm going to take 5 minutes, guys, and when I come back, we'll get going again. Trade away if your rules are met. Back in a few. All right, ladies and gentlemen, I am back, and let's just take a look, right? Let's see what happened. We did have a termination condition. It did provide odds favorable momentum, odds favorable momentum. Notice how this is one of those 50-50 looks, guys, and I think that this is a lesson for a lot of you guys. We talked about the 50-50 look, when the smalls break through and the large don't. This is one of those trades, guys, that everybody can't wait to take. Everybody can't wait to take that 50-50 trade, that medium probability trade. And I like to talk about it, especially when it sets up like this, when it looks like it's a great opportunity. Does everybody... That's a termination that creates a full reversal, guys. This is a fantastic look. It really is. This is a tone-setting look. And this is odds favorable momentum, right? It's that momentum phase. Everything says up. The market's likely to continue in the direction of the trend. And this even gives us that look that we consider the best look for a 50-50, right? A small window of opportunity. Strong triggers, no divergence. Guys, is everybody with me on this? This is a good look, isn't it? Maybe. Maybe not. Guys, here's one of the things that I look at. When I talk about this medium probability trade, when I'm talking about this 50-50 trade, one thing that I put into my plan is one area not broken, guys. And I do this for a reason. Can everybody hear me? Am I talking to myself? You guys are probably waiting for opportunities, right? One area not broken. Because on this particular trade, guys, I have one area, I have two areas, and I have three areas, right? And they span almost 3 points. It's about 10 ticks that I'm hoping is breaking with that odds favorable momentum. So we're not giving away the advantage of a clear path in the sense that there's one area that hasn't broken yet with that odds favorable momentum. Guys, we have three areas, right? We have three areas that haven't yet broken that you're hoping for the potential. But it didn't happen. Does that make sense? You have no divergence, you have a small window of opportunity, but it's not that one area that hasn't broken yet. It's three areas. It is three key Fibonacci areas that you're hoping this momentum carries you through. So I like to show this one because it happens a lot. And when it happens, you're just kind of stacking odds. So that's a good lesson. The market just gave us a good one, that live market coming through, talking about it. And then look at this, guys. Odds favorable momentum, no termination conditions. There's your pullback to resistance inside of favorable large triggers. Hopefully you guys are working on that one. Joel, let's see what you did, my friend. Joel, this is the same one right here that Jeremy took. You don't have momentum. And it didn't work, right? And then you didn't have momentum again, and it didn't work. And then everything turns and you go with the momentum and you go with the direction and you're able to get paid. So trade number one stopped out. Biggest charts didn't have the best momentum look, right? Larger down, smaller up, indecision. Trade number two, long, you're against the large, you're against the small, you're hoping that a blue line holds. You say you're not sure what it looks like. Joel B., this is a great example of not having that rule number one met, and that clear path becomes difficult if you don't have the momentum behind it to push it. And then when everything rolls, right? Everything rolls, then that market kind of does what it does, and you're able to get it all back. And I like this. This is a great example. Joel, if you're with me. Rules not met, right? Rules not met. And then here you don't wait for the pullback, but here you finally get that pullback. You get that best of the best scenario, and that's the one that pushes you all the way down to the bank. A little bit of patience sometimes, guys. A little bit of patience. Waiting for the rules to be met creates advantages. Every chart agrees. Haven't reached the key area. Pull back to the area of resistance inside of favorable large triggers, guys. This is an easy one. How do we study this? How do we build confidence in it? When the rules are met on the 13-2, circle a tail. If that circle lines up with the area of resistance inside of favorable large triggers, guys, congratulations, you've just located a high probability trend trade. You can use your checklist. If you have snag it, guys, you can drop it right on the chart. Is the market coming from a good top or bottom? What do you guys think? Is it a termination condition that creates a full reversal? I'm inclined to say no. It's Monday, isn't it? Do I have odds favorable? Does anyone else go through this process, even if they miss it? Price didn't reach the area. Area inside of favorable large triggers. So guys, let me ask this. You're being real quiet. Some of you are going, well, I didn't take that trade. Who didn't take the trade because we got 3 or 4 ticks off of the fib? It's close, right? It is close. These are areas. Price didn't reach it. In the beginning, let it be black and white, right? Let it be black and white. Price reaches the area. Price doesn't reach the area. Your profit potential comes from the pullback to the area, not from the end of the bar to the area. So that's one of those things that you see a lot. And then we start getting all these divergences, guys. Now we're losing momentum. We're right at the one-to-ones. Do you see how it's not the best momentum, right? Divergence means a loss of momentum, so we're seeing visually losses of momentum. Because of the termination condition? Because you got close, David B? So this is where, if we're going to keep it black and white, price didn't reach it, right? It came close, but it didn't quite make that push. It didn't quite get to that key Fibonacci area. Textbook, not a termination condition yet, right? Guys, if it's a tick off, and this was 2 ticks off, if it's a tick off and the triggers aren't strong, right? Maybe not. Alan, you said you didn't take it because those large hadn't completed going through, so you didn't take it with divergence. Perfect, guys. Great job following your rules. You'll never get an argument out of me at all. Some of you will take this medium probability trade and you'll manage it assertively, right? You'll wait and you'll see what happens. So guys, it's always okay whether you take it or whether you don't take it. Have reasons, right? My rules were met, my rules were not met. And gentlemen, if your rules weren't met, then I applaud you for not taking the trade. And then some of you will say, with this much momentum, having not reached the area, going to take that trade and get paid on the way down. And that's a 50-50, right? And there is a divergence. Strong triggers break things. Tammy, I think it's a great trade. Well, David and Tammy, you've got a different look than these guys had, right? This is just a 50-50. David, let it be simple. Let it be super simple on termination conditions. And I think let's open the door. Look at that entry, manageable trade. I think it opens the door a little bit for a good discussion. In the beginning, keeping it simple, letting it either be the areas hit or the areas not hit, right? Letting it be price reaches the area or it does not. That's a great way to start. What happens eventually, and let me find it because I think I've got it in the picture here. Guys, Fibonacci areas are just that. They're areas, right? So I don't know if the sales people talk about it. What it looks like when these areas are coming to be. Is that still part of the presentation? Are you guys... Let me see if I can find my picture. I lost my picture. No worries. So guys, when your software comes on, when you turn it on, it goes back and it measures every pivot in the market, every up, every down, and it calculates these Fibonacci areas, and it's based on thousands of calculations, retracements. It's based on thousands of areas that come together, and it weighs them and it sorts them. And what you find is a tick off, David. For me, a tick off in my mind, it's an area hit if it's a fib. Because fibs are the result of so many calculations that they are actually areas. There may have been 300 fibs in this area, but that center line was the most powerful. So one tick off, same thing, you see it here, one tick off, in my opinion, that's enough. But when I'm 2, 3, 4, 5 ticks off, the fibs are actually that good. They're that solid in a lot of instances, where if I'm a couple ticks off, let's see if I can find, I'll just go to the live market. For me, that's pretty good. I feel good about this because I'm still away from it, and then I'll start talking advantages. Look at the momentum, guys. This is the absolute strongest momentum, right? The smalls are outside, the window is tiny. And this is where practice and repetition is going to come in, and it may change your plan just a little bit, right? So David, if you're focusing on that consistency, that best of the best, and you miss this trade, whether it's divergence on a 50-50 or whether you're a tick or two off of the area, no worries at all. But take pictures, right? What were the advantages? What was the potential disadvantage? Did I have more advantages going in? Is this the trade that's worth taking if I have a great entry to manage at the trouble spots? And that's how plans grow. And it really is just that repetition over and over. And David, I'm pretty sure you have a great grasp on termination conditions. You may need to create a plan that weighs out advantages. Geo, you say all colors, same, going down strong. You're looking for the pullback to go. I'm trying to see what you have going on here. That one's kind of up in the middle. And you're taking that. Everything says down. The path is clear. Here you go. I'm not sure about this one up here. What got you in? Short. Into support. Add a pivot stop out with the triggers up. I'm glad you got paid on it. I'm not sure what rules you had in place there because you don't have anything written on the chart. But when everything turns and goes the same direction, you're able to capitalize. Guys, this is one of the reasons why you writing on your charts helps me a lot. If you just want to show me the trade, hey, Mark, look what I did, cool. But sometimes if you're so far outside of the rules, your rules help me have a conversation with you, right? Let me know why you did what you did. Because just in my own brain, Geo, I have trouble understanding why this short makes sense. Does that make sense? Over here, I can get on board 100%. Over here, yeah, I struggle to figure out why. And sometimes, guys, I hate to admit this, sometimes you guys just teach me, right? Trade one, you got in early, and then, yeah, Tony, the larger's still up, right? But the smaller starting to come down. Looking for that mid band rather than right into the fib kind of creates a little advantage. And then you take that perfect trend trade. You managed it tightly, maybe a little too tightly, Tony. Fear of missing out. It's real, isn't it? Guys, what's the fear of missing out? Do you guys, You know, I didn't know what this was. The fear of missing out. Let's define it. I think defining it helped me avoid it a little bit, guys. The fear of missing out can cause investors to make riskier choices than they otherwise might. Includes getting in too early, right? With a much larger stop than's warranted, which doesn't guarantee a win, only a bigger loss if it loses. Getting in late without the proper advantages. And that's what happened on you, Tony. You got in late or early, right? And your stop had to be huge. And by then, you're exhausted having to sit through that and you get out quick. You know, is all of that worth 2 ticks to you? That's one of the things I started asking myself. Is this much pain and suffering worth 2 ticks? And then I think that the next one, it wasn't even the fear of missing out. It possibly was just the fear. So let's go through the idea. And guys, management's the second part of it, right? And Tony, remember that everything on the 13-2 was strong. You had the perfect entry. You took the exit at the first trouble spot, and I like that. I think that was great management. But by the time you took this exit, right, could have been break even. What changed? Your smalls are below the 1-to-1s. Your large are down strong. Everything is down strong. Everything is pushing down. This is where you start to build that trust to get that next key area. This is still a beautiful trade. It's very tight management. But I noticed that this one hit your stop. It didn't hit your target, which means that when you got a couple ticks through, you said, oh my gosh, I better tighten that up. And remember, guys, your 5-1 is a smaller, faster chart. And here's a great example of that. I'm going to take a rectangle, and I'm going to circle one bar right here. Look how many bars show up inside of that one bar. Guys, there's so much happening on a 5-1. When the 13-2, and Tony, I'll show you the exact same thing here. This helped me. I hope it helps you. There's that one bar on the 13-2 that told you it was time to get into the trade, right? What changed? You still had odds favorable. You still hadn't reached the key area, right? The smalls never got inside of the large. From your time of entry, the only change that you ever saw until that target area was that the smalls actually went in advantage of the trade as well. So, guys, remember that the 13-2 leads the way. Remember that the 13-2 is the consensus of the large group. The 13-2 defines momentum. The 13-2. Yeah, and it takes time to trust, doesn't it, Tony? Which is one of the reasons that I think posting in the room is so important. But guys, every great entry has a story for management, right? And there's a section dedicated to management. Tony, this was a trade that I took a long time ago. I had odds favorable. I had a clear path. I had the perfect entry. I took quick profits on the first contract and I went break even. And then everything becomes a what's changed, right? The 13-2 is still strong. The 13-2 still has a clear path. Nothing's changed. There's no reason for me to not believe that it's not going to make it. And use that phrase, what changed? Maybe if divergences begin to print, that's a change. Maybe if my trigger lines get weak, that's a change. So guys, every time you take an entry, right? Let's look at just a random one. And this is actually a good example. I got lucky here. So this was an entry, right? This was somebody showing me the perfect entry, right? There's an exit. There's an exit. Look at that 13-2 strong. Letting it lead the way, it makes it easy to grab that extra money on the second push. So guys, every time you get in, if you feel like you got out too early, hang on a little bit, right? Take a look. Go back. Define it. There's your entry. When everything is strong, It's okay. Let it hit those big targets. So great picture, Tony. I love it. And Jose, one from replay. Whoops. 50-50 trade, right? And the smalls are below the large. The large are wide. They're starting to go through. Let's see what it looked like on the 5-1. So on the 5-1, there's no divergence. Okay, you take the entry at the area. You're outside of the window. I think the one chat that I would want to have on this one, so what's a 50-50 mean, right? A 50-50 means that an area has the potential to break, but it hasn't broken yet, right? For the 50-50 to have the best chance of success, Jose, this is your trigger look. There you go. I could do it like that. In a long trade, that best is, man, there's got to be a gap between the small and the large. There's got to be that odds favorable momentum, that space, like scissors open, ready to cut. Same thing in a short trade. You want to see that gap because when you have that gap, momentum is at its absolute strongest. What we're looking at on yours here, my goodness, I have a lot of pictures. The smalls are still touching the large, right? If it was a clear path, it would be easier, but we don't have that clear path. What we do have is 67.90, which hasn't broken yet. And we don't have that best of the best odds favorable momentum, guys. In 50-50 trades, works so much better with odds favorable momentum. And then Jose, there's that one tick scenario. You do have odds favorable. You have no termination conditions. There's your entry. There's your exit. I can get on board with this one. This is one of those ones where we're still a tick or two off, right? Every advantage is there. Jose, I think this is a great trade that didn't work. I think this is one of those costs of doing business, and I think that it is only better because you are coming from Fibonacci support. Is that how you saw it as well? It was close, but it didn't make it, but you had every condition perfect. I can't find anything wrong with this look. You had odds favorable, favorable large triggers. You had the best momentum look, and man, just a cost of doing business. That's part of that trust piece, guys, is taking what appears to be the perfect trade and understanding that they're not all going to win. You can't win every trade. I don't think it's ever happened. Which brings me to one of the most profound things a day trader has to realize, guys. When you stop expecting to win every trade, you're going to start winning more of your trades. When you stop caring about the result, but you are concerned with the execution of the trade. Because the execution of the trade means that you have the advantages in place, right? The execution of the trade means that you have odds favorable momentum, that you have no termination conditions. It means that you have the advantage of an area inside of favorable large triggers. And if you take 100 of these trades, you have to mentally and financially be ready to take 20 to 30 losses, guys. And you don't know when they're coming. This was one of them. This was a cost of doing business. Do you trust your rules enough to take this trade every time it presents? That is the key, guys. If you have 200 examples of perfect entries, you probably do. Look at all those high probability trend trade entries, guys. I trust my rules. Price reaches 1-to-1s. Don't have odds favorable momentum. Smalls are working inside the large. Guys, this is one of the termination conditions that we didn't talk about this morning. 3 divergences in the same location might terminate a trend, guys. This is the only small chart termination condition that I really respect. And I'm going to go to that from the termination conditions section, guys. Whoops. 3 divergences in the same price range may terminate a trend. Do you guys remember what is divergence? Divergence is nothing more than a loss of momentum. When you lose momentum 3 times in the same price range, it doesn't matter what chart that you see it on, but you're going to see it first on the 5-1. It may terminate the trend, guys. I treat this as a termination condition. It becomes even more powerful when the small triggers work their way inside of the large triggers, meaning that you've gone from odds favorable momentum, that momentum phase, to anything can happen triggers. And it becomes even more powerful still when the third pivot is higher than the previous from a low or lower than the previous than a high. Guys, you can use this in a multitude of ways. If you're waiting for that high probability trend trade, right, and you get 3 divergences on the 5-1, it may tell you, hey, don't take that trade. If you take a trade and you're in at the absolute best of the best spot, guys, 3 divergences say it's time to stop hoping. The market's losing momentum. It makes a trade manageable. If you take this as one of those 50-50 trades, right? One of those trades, maybe there's not an area that's broken. You can begin to identify conditions changing to manage assertively. Guys, when you see these 3 divergences in a price range, if you see it on the 5-1, it might help you identify when the market is turning, when it hasn't reached a key area, or as we just saw here, it may be creating a confirmation that this area is not likely to break. Did anyone try to take a 50-50 over here and say, I wonder why it pushed up so high, guys? Multiple divergences in the same location. Trigger lines not breaking through the area. Respecting those fibs. Guys, sometimes the market is chock full of opportunities. Sometimes you have to sit on your hands and wait just a little bit. Here's crude oil. Let's have one of those all charts agree moments, right? I'm going to scroll back and circle that tail. Outside of those favorable large triggers, maybe not your trade, right? But you see how everything agrees and everything says down and the market goes down? Everything agrees. We go from a little run over, a bad bottom, not a termination condition that creates a full reversal, straight up to resistance. Just waiting for rules to be met, guys. That's it. I feel like this is a lecture today more than a discussion. What would you guys like to talk about? It's going to be a long class. The market's bouncing, right? It's hitting those fibs. They're reacting. What would you guys like to talk about? Debbie, I had an amazing weekend. Thank you. We went down to the coast here in the Pacific Northwest, had some lunch with some friends. I had a friend from Dallas. She was visiting a couple of friends of hers that live south of here. We met up, had lunch, watched the surf and the seagulls. Had a great weekend. How about you? Good one, I hope? Awesome. Great weekend set up for perfect Mondays, I think. When you come back refreshed, feels good. You had your granddaughters? I'm not there yet. My kids haven't popped out any grandbabies yet, but I have a grand doggy, and we spoil her rotten. My son's got a dog that my wife and I are absolutely in love with. 4th in the oven. Oh my goodness. I'm excited. I loved being Uncle Mark to John's kids. It was so much fun. Like when kids aren't yours, you get to send them back. So much fun. So let's see what we have, guys. Small triggers are up, but the large triggers are down on the 13-2. I don't have odds favorable momentum. Large triggers are up, synthetics are down on the 5-1. I don't have favorable large triggers. One lives with you? Just the granddaughter or both the parents? My kids just moved out, so, well, about a year ago. It's wild being an empty nester after 23 years. Grandson and the one in the oven. Right on. You're good people. Taking care of them. Jose, let's see what you got. Entry not in an area. All right, let's see. Of course, after the fact, it looks a little different, Jose. But let's do this. Let's take two charts. And this is going to be a great segue for the gap theory. Hardest thing about being a day trader, guys, is doing nothing when there's nothing to do, right? Yeah, and Jose, those charts were definitely saying no. But let's keep it simple. And guys, this is one of my things. Not a sore spot, but this is one of the things that I'm guilty of it as well. I'm guilty of it as well. If you're going to have 4 charts, use 4 charts. Let each chart be a part of the decision-making process, right? So like Jose said, Jose even said, he goes, man, my other 2 charts said no. The other 2 charts said don't do it. But he did it anyway, right? But that's cool. That's just a decision. But Jose, I think what really would have helped here is the gap theory. And the price is beyond the midband, right? But essentially, you've reached the area, and the large triggers didn't follow. Price exceeds Fibonacci resistance. It doesn't have to stop to the tick, but if price hits the area, even if it exceeds and those large triggers don't follow, it's likely to close the gap to the large triggers. It exceeds a little bit, but the large triggers don't follow. And this is kind of what you had going on. It reached the midband already. Even though it exceeded it a little bit, the large triggers were still a full bar away. Guys, for those of you that are new, this is what we call the gap theory. And what this does for us, and yeah, you're kind of far beyond. This one's a little bit different. So Jose, I think you're absolutely right. You're so far beyond, the large triggers are at it. It just pulls back to that midband. So rule number 3 is the one that probably got you here. There wasn't an area. And this market just didn't want to go from what it was doing. But that's where you could have used those 21s in your range chart to help a little bit. Price pulls up. Rule number 3 not met. And because rule number 3 wasn't met, it might have kept you out. And now we're coming right back up to resistance, right? Small triggers haven't broken. Guys, the market's not making it easy today. There's not a lot of clear-cut opportunities where all the rules are met. Give me a why if you're with me on that. There's not tons of rules met opportunities. Guys, it's days like today that test you. It's days like today that test me. There's gaps and then there's sinkholes. And it's hard sometimes, isn't it? It's hard to be tested like that. Because it'll have that big run and there wasn't a rules-based entry and you're just so focused on your rules. And guys, my focus is only as good as it is for the day. Some days it's better than others. Do you see how no trigger lines have broken through? Smalls haven't broken, not coming from a good bottom, right? One trigger not really overlapping. And there's all these challenges going on, but it looks like a good entry. So I'm bored. So I'm starting to look. I'm starting to convince myself that it's okay to let go of advantages, right? That it's okay to maybe break rule number 2 because rule number 1 is in place. How many areas aren't broken here though? 2 areas haven't yet broken, right? Mid-band wasn't inside of the triggers. Smalls haven't broken through the area. And the 5-1 is reacting to the fibs, right? Is it going to hold or break? Does anybody know definitively? What do you think? I don't have any idea. Don't have any idea. You probably don't either, but you're willing to make a guess sometimes because you're bored. Who went long and they're wondering why it isn't working right now, right? Just looking at the indecision, guys. When the market does this, this is the hardest classroom in the world to teach. I'm not going to lie. Because not only do you have to be patient, guys, I have to be patient. And I have to tell you over and over, hey, there was nothing to do here because nothing agreed. But now I've got odds favorable, right? Now I've got a 50-50 look. Now I'm looking to see if I have areas that fall inside of favorable, but my favorable are kind of split. What's my window of opportunity? If this 50-50 trade is likely to do something, it's likely to do it from there. Does everybody see the look on the trigger lines? That's your best look, right? Odds favorable. If you're not sure, how do you feel about it? Yeah, Alan, amen. It's a job description. It's okay to sit and do nothing, right? Man, it's hard though, isn't it? If I take everything off, that sure is a good look, right? If I add indicators, well, then it becomes a medium probability look. So I'm just going back to everything that I've learned, right? Everything that I've put together. I wonder if my trigger lines look good. Are they overlapped one on top of the other? Not yet. So let's talk about advantages. 1, 2, 3, 4, 5, 6 losses of momentum coming from a termination condition. That feels pretty good, doesn't it? Odds favorable momentum feels pretty good. Areas inside of triggers feels pretty good. Now it's just up to the market. You're in Myrtle Beach doing nothing is what you do. I'd go nuts. I go nuts doing nothing, guys. I talked to a trader once, and he told me, he goes, man, if I don't take a trade like in 15, 20 minutes, he says that if he doesn't take a trade in 15 or 20 minutes, he literally stands up, walks away. Goes and does a lap around the house, goes and stares in the fridge even if he's not hungry, does anything other than allowing his mind to fabricate a trade. It seemed pretty smart. I like it. I've never been to Myrtle Beach. That's on the list. One day. Smart trader. But it takes a while, right? Guys, how do you follow rules? The easiest way to follow rules is to trust them. The easiest way to trust rules is to see them work so many times that you can't stop. Channel surfing. I like it. You've got 3 divergences in the same location, don't you, Gary? On crude oil, I see 3 divergences with a trigger line, change, higher pivot. On the 21.3, got that divergence low, 2, 3. That qualifies, right? Divergence prints here. You just have to clear. You just need a clear path. And you're in a mid band from a bad. It's that indecision. I like this. When you can say, you know what? I don't have a clear path. This is great usage of a higher time frame. Into a mid band from a bad bottom with key fibs below. No reason to risk it. Great picture, Gary. Guys, the S&P is trying, but they're slow. Look at that indecision on the 5-1 chart. A battle between buyers and sellers, just waiting. Waiting, waiting, waiting. Trading on sim after a total crash, that's smart. That's it. So guys, when there's nothing to do, why not scroll back? Let's scroll back and see what we see on a 13.2. We can begin to identify termination conditions. Guys, did you know that there's a section dedicated to termination conditions? You can go back and take pictures and put them into your spreadsheet. You can go back and circle tails when there's odds favorable momentum, guys. There's a million things to do when it feels like there's nothing to do. You can circle odds favorable momentum, 50-50 from a term. Go back and see what it looks like on the 5-1. There's so much study opportunity that doesn't require the market to be live. Terminations being hit, odds favorable momentum being produced. Tons of opportunities. You just got to go back and look for it. John says he had 1 HVA short. Termination, smalls down strong. Took half of it off at the trouble spot. Are you on 7 or 8, Gary? 7, yeah. They'll be different sometimes. But guys, look at it. Termination, divergence from a termination. Small triggers are rolling. It still fights a lot, doesn't it? This is a first shot if it's going to be a top. You don't have to. Guys, how do you get to the point that this becomes a part of your trading plan? And I want you to see something. John Novak didn't look for the HVA over here, right? He waited for his small triggers to turn to get some indication, for the smalls to go below, right? For price to get to the other side of the smalls. There's a lot of patience here that you guys don't see. I think on Friday afternoon, he said he had 32,003 pictures. It takes a while to get your plan to this point. It really does. But the more you learn to read your charts, guys, the more you learn to recognize advantages and disadvantages, the easier it becomes to get in. Avoiding the mess. Waiting for it to be obvious. 50-50, right? Smalls above, larger wide. Odds favorable, momentum. Everything's rolling. Looking for total agreement. Why don't we trade in determination conditions? Because price reacts. Why don't new users go short because of a termination condition? Because everything still says up, guys. Your large were up, your small were up, your background was green, your large were up, your synthetics were up, everything set up. Just because John Novak took a short doesn't mean that you have to. Every indicator on every chart was pointing north. And now everything agrees. I like this one better than the HVA, right? Now every chart says up. Two divergences, it's a higher divergence, everything says up. And Gary, remember you showed me the picture of the 21, didn't you? Do I still have Gary's picture of the 21 chart? Three divergences in the same general price range. Might terminate a trend. We'll see. It's still 50-50. What you were looking for at the trend trade 81 hit, I will cancel it. I don't know what that means. Oh, if 81 is hit, you will cancel it. Got it. If they get to 81, John, you're saying so if the market reaches a termination condition, you won't trade directly into that termination condition. That's pretty smart. Good stuff. Guys, it is 10:56. I'm going to take a little bit of a break. We'll let the market do what the market does, right? It's either going to go up or down. You're either going to have rules met or you're not. Today's killing my voice, so I really want you guys to take charge on this last hour. If there's something you want to talk about, let's talk about it. Post your pictures, ask your questions. I'll be back in about 5 and we'll get into that last hour. All right, here we go. Last hour, guys. So let's see. John Novak posted in the room. Let's take a look at it. John Novak says, with odds favorable momentum, with no termination conditions, with no divergence, he'll take an entry. Great entry. Guys, every chart agrees. Every chart says yes. Probably going up. Your advantages are in place. He's already break even because it is a medium probability trade. Very well done. And then as that market goes up, divergence prints now on a 50-50. He's not willing to lose. You'll notice that he has his stop. And now it's over. Divergence on a 50-50. And if I'm not mistaken, look at it push lower, guys. Great management. If you're going to take medium probability trades, you have to have an if-then scenario. If this happens, then I'll do this. Gary, same trade. Same look, different market, right? Coming from that bottom, everything is strong. Everything says up. You take the entry, you take the first one, make some money. You take the second one, getting in, not willing to lose. Gary, that stop is super tight right there. I know, right? They look just like each other. Jose, same thing, 50-50, entry at the area, stop keeps you safe. Money, money. Nicely done. Jose, you earned that one today, didn't you? You had a couple that looked great and didn't work. Nice trading, Jose. And guys, consistency. If Jose shows me a chart, his rules are met, right? If Gary shows me a chart, his rules are met. If Ron shows me a chart, his rules are met. Guys, one of the things, and does anyone ever just Google stuff? How do I become a profitable trader? How do I become great at this? How do I know I'm becoming a profitable trader? Guys, one of the biggest common threads for traders that are on their way to becoming profitable is every trade looks the same, guys. They become picky. You become picky with what it takes to get you in the market. You're not willing to jump in because you hope a trade wins, right? Google said, listen to Mark. Clearly, Google is broken. Guys, hope is one of the worst ways to trade. Your trades should look the same. Why should they look the same? And let's talk about that. It's one thing to be consistent. It's another thing to know why you're consistent. Guys, all of my trades look the same because in order to enter the trade, my rules must be met. The rules from my trading plan must be met for me to get into the trade, which means that if I'm doing it right, every trade that I take looks the same. Whoops. Every trade that I take has the same entry conditions. Every trade that I take has the same advantages. What did I do here? There it is. Every trade looks like the previous. Every trade looks like what the next is going to look like. Jose, there it is. And then divergence prints. But Jose, divergence doesn't print on your pullback, right? Divergence is above it. You have a pivot stop out, but divergence didn't print on your pullback. Do you see that? You didn't lose momentum as you came back to that area at those large triggers. Having that HVA area gives you that warm fuzzy. Let me take a picture of your picture. This is a previous divergence, right? That magenta line. Are you with me on that? That's a previous divergence. So in order for divergence to be true on this bar, Jose, you have to have that negative number in that magenta line. So the only way that you can count that one as divergence, let's watch this, is if it looks like that. Then you have divergence on that bar, right? But you don't. There's no loss of momentum coming into that area, so when it pulls back, it helps a little bit. That HVA helps a little bit, but you actually took it without divergence. Oh, so you had two. Okay, that is a much better picture. So you had two divergence against it, but because you had strong triggers in an HVA, because you had all triggers up, because you're coming from a good bottom, you took the shot. And then three divergences in the same location says manage out of that trade without a loss. Beautiful execution, right? Look at your 21 though. You've had a pivot stop out at resistance. Whew. That's a tough one. Great entries make for manageable trades though. So I see why you did what you did. Two divergences, you still had strong triggers. One thing that gets me a little bit on this one, that HVA line helped a lot. Is it going to go from right here? Whoops, wrong one. So that's 95, right? That's 94.50. And then that's 93.75. That's your window of opportunity on this trade. That's a big window with two divergences. And then Jose used, and this is great usage of an extra chart. Jose used this chart with strong triggers, confirming the momentum, right? He had areas, and he also had a high volume area from his 13 range right at the area with the strong triggers. And Jose, I think that was a great read, right? And after the reversal bar, you moved your stop. Beautiful. Perfect execution. And great management. Quick profits, third divergence, exit without a loss. Jose, that is rock solid, my friend, on so many levels. And then there's that crude oil, that 50-50 still hasn't worked, has it? Divergence is printing. And then there's your three divergences, right? There's a fourth divergence. Bing, 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 bing. Small chart showing the indecision. Let's see how many. One bar on the 13.2, guys. Look what's happening on the 5.1. 13.2 leads the way, but we use those best entries. Now we just have to let it all work itself out. Let it all agree. Guys, what do you want to talk about? I'm just going to start going through this. Split triggers. We just saw this one, right? Guys, when they're trending one on top of the other, your window of opportunity, that area where the market is likely to continue, it is concise. Your risk is reduced. Look at the other picture. That's your highest point of support inside of the large trigger, guys. Your one-to-ones are inside all the way down here. When your triggers are split, you create uncertainty, right? You create this feeling that it may go from here, but it might go from there. Your risk grows exponentially. Guys, that's a good one. That's that split trigger line look. This is a good one for you guys that are using that 13 range. If you were looking for a 50-50 trade, that HVA line causes a second lower divergence. This one's called losing advantages. Whoops. Anything can happen triggers. Loss of momentum, right? There's only 3 advantages that we really talk about. Momentum, didn't have it, don't have it. Got lots on the gap theory, right? 3 divergences, kills a trend. It looks like it's going. 3 divergences is a trend ender. You guys remember talking about this one? Aren't we seeing that right now on the S&P? Patterns repeat themselves over and over. Give yourself the advantage. That's 4 divergences in the same price range. That's still split triggers. It may still go up, guys, but do you see how the advantage is gone? All right, y'all, what do you want to talk about? I'm going to go mic silence for a minute. I don't have rules met on the S&P. Now I have things starting to change a little bit on crude oil. Termination pushes down, can't do it. It's what we call a bad bottom, gives us a 50-50. 50-50s are more likely to win from a strong bottom. And now we're getting strong triggers, guys. Small's below the large are wide, they're angled down. Man, this is a great idea, the process, isn't it? And I'm looking over here. If I get a reversal bar that signals the beginning of a pullback, where's my lowest point of resistance? Where's my highest point of resistance inside of those trigger lines? 50-50 or clear path? What do you guys think? $50-50. Absolutely, Jose. Absolutely, Tony. So guys, what do your rules say about a 50-50 that isn't coming from a termination condition? A lot of you say, man, if I'm taking a 50-50, it's got to come from a termination condition that creates a full reversal. Some of you will say, if I'm going to take a 50-50, divergence can't be present. Some of you will say, if I'm going to take a 50-50, my triggers should be trending one on top of the other, not split, because it creates difficulty in knowing exactly where it's going to go. Some people will say that those large triggers shouldn't be a full bar away on a 50-50. What do your rules say about a 50-50? My rules have been written down on a piece of paper. My rules say on a 50-50, one area shouldn't be broken. Small should be outside of the large on both. No divergence on the 5-1. Guys, that's my deal breaker right there. From a good top or bottom, only adding weight to my deal breaker. Divergence, deal breaker. So no matter what happens next, guys, my rules weren't met. I am obligated to sit on my hands. But do you see how we piece that together? Not from a good top. Large triggers a full bar away, divergence prints, split triggers. Is it going to go from the mid band? Is it going to go from 59? Or is it not going to go at all? Who took the trade? And it's okay if you took the trade. Did you read it the way I read it? Did you read it going through the advantages, the disadvantages? Did you convince yourself that it's okay because you're bored? Did you decide that it didn't fit the plan and just sitting on your hands waiting to see what happens? Man, and Chadwick, don't let me influence your trades, right? But I'm going to talk about them. We're going to talk about what we see in the live market. Just because my plan doesn't agree with it doesn't mean that your plan doesn't, right? I speak in advantages, so you were taking it off when it hit and you took a loss? All right. So what were the conditions that had you enter the trade? Like, what were the conditions that said, I'm willing to take the trade? So if I had a sell, whoops, wrong one. If I had a sell limit right here and I annotated my chart, if the world stopped, what would my annotation say? This is what mine, and we talked through it, but guys, this is what I saw. I saw a bad top, right? I saw a big gap to the large triggers. I saw a divergence on the 5-1. I saw split triggers on the 5-1. And guys, I don't ever look for reasons to lose. I look for advantages. These were all disadvantages to me on an area that hadn't yet broken. I chose not to take the trade, right? And then, Jeremy, I know you said never mind, but I'm going to address it anyway. I don't have anything in my study materials or anything that I teach that references pretty good top, right? I've got strong top, weak top, strong bottom, weak bottom. Pretty good is pretty rooted in opinion, wouldn't you believe? But guys, I go through all this because this is what your brain is going to do. You're becoming a chart reader right now. You're becoming able to look at your indicators, understand where it's likely to go, where it's likely to continue, where it's likely to stop. But you have to go through this every time. Every time you see a trade, you can't only look at the 5-1 and say, that looks perfect, I need to get into the trade. Every time you look at a trade, you can't say, well, everything says down on the 13.2, I should probably go short. You have to piece it together. You have to go through this process, starting at the first. Am I coming from a good top or bottom? And if you answer no, then you're looking to not give up any other advantages. Did I have odds favorable momentum? In the moment, it absolutely appeared so. But what about no termination conditions? Well, my large hadn't broken, right? And they were a full bar away. That's a troublesome look. And did I have an area inside of favorable large triggers? Well, if I go through the clinical definition, right, one on top of the other, I didn't. Do you see how that quick little rundown of your checklist probably keeps you out of the trade, probably avoids the loser, keeps the powder dry? Guys, being successful, especially on days like today, isn't about the great trades that you take. It's about the crappy trades that you avoid. It's about not giving up so many advantages. Everybody said it was going up, right? When they took this one, when the higher divergence printed, when the multiple divergences on the large chart printed. Everyone said that it was probably going up, guys, and a lot of you took these trades and made some money. But then the indecision started. And when the indecision starts, you have to sit on your hands. You don't have to. You can trade all you want. Man, look at price react to an area, guys. Above it, below it, above it, below it, caught between triggers, divergence is printing. Is it going up or down? Too many divergences on the 13.2 to continue to go up? Do you mean the 5-1? I've only got one divergence on the 13.2, and that's from a bad top, isn't it? So Shogun says there's just too many, it can't go up, right? Let's see. Will the market go up? My reply is no. So Shogun, what's happening now doesn't guarantee, and I like to do that because it's just fun, right? It can still go up. It just says we're not going to go up with it yet, right? So Shogun, -9, -35, -7. What do those mean? What do they mean? So I don't get hit by the bot. That's what I think they mean. Not a darn thing. So guys, divergence either is or is not. And Shogun, this is a great, I love that you pointed that out. Mark, the numbers are decreasing. Either divergence is true or divergence is not true, right? It's true when the magenta line prints. It's true when the negative number prints. It doesn't matter what the negative number is, guys. And I got caught up on this too. But what are some things that happen even through all these divergences? Do you notice that everything is still strong? Do you notice that it's still just one bar, that we still haven't reached a termination? That the triggers are still cranking, the larger up. We're still coming from a termination condition. Guys, you're just waiting for things to sort out. If you took the long, you had to manage out. But your large chart still says up, doesn't it? Your large chart still says odds favorable momentum. Your large chart still says that we are more likely to hit 4209 than we are to go back to 4287. The large chart leads the way. The small chart keeps us patient until everything agrees. I think this was a great lesson, wasn't it? If you took the first trade, the small chart allowed you to manage out of it without a loss. But what chart leads the way, guys? At 42.93, just keeps smacking into it, doesn't it? Shogun, did you have rules met? You didn't, right? So you didn't have to get... Shogun. What does the 13.2 say it's going to do? Watch this, guys. Guys, what's the background on the 13.2? Up or down? What's the momentum on the 13.2? Up or down? Is there any reason to form the opinion that the market's going down based on the 13.2? Nope. But there is reason to believe that it may shuffle a little bit, right? Isn't that amazing? Which chart leads the way, guys? This is a great example of it. The large chart defines direction. The large chart defines momentum. The large chart defines the areas. What kind of chart is the entry chart, guys? Everybody say it in full caps. It's an entry chart. Did it make the fib, Shogun? Sorry, I took my fibs off for that lesson. There is no fighting through. Don't give it that much personality. We're either a turn... Oh, look at that. Price reaches resistance. Absolutely no trigger lines broke through. Guys, what rule isn't met right now? Price reaches resistance. No trigger lines break through. Do I have a clear path? I don't. Guys, even if I sat through all of this, I still don't have a clear path. Even if I have odds favorable momentum, I still don't have a clear path. Even if I really, 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 really want the market to go up to 43.84, I don't have a clear path. It's just not my money, guys. My advantages aren't in place. Don't let it be frustrating. Shogun, you're looking at it through the wrong glasses, right? What is it when you can see an area clearly on a chart that you know that you probably shouldn't trade into? That's an advantage. When you can look at a chart and recognize that it doesn't have the momentum to push to the next area, that's an advantage. When you know that you can pinpoint where the market is likely to continue, that's an advantage, guys. So if your advantages aren't happening, don't let it be frustrating. Be excited. Jose taking that continuation. I'm not sure what kind of trade this is. The triggers are up, the large were flat, right? Your synthetics are still down, but your large are up. Shogun, I'm going to come through your monitor at you. What's a triple bottom? Show me in your rules where triple bottom shows up. Ron, not a word. I know what Ron's thinking right now. Jose's taking advantage of a bad top that comes to the mid-band with the gap theory when the triggers agree. Beautiful. And that's okay. Jose, bad bottom, right? You let it close the gap to see what it does. Smalls go up. Everything starts to go up. And you say, you know what? I'm going to take a shot. Short didn't work. And you're like, wait a minute. Let me recalibrate. That's a bad bottom. Unfinished business. Jose, I like the trade very much. Gary, same one. That first 50-50 with two divergences, getting in, making money. And then when the third divergence prints, you sit on your hands. And guys, look at it. The 13.2 led the way, didn't it? Say that in your head, guys. Write it down on a piece of paper. The 13.2 leads the way. The 5.1 creates an entry area. But the 13.2 leads the way. It doesn't matter what you think, what you hope, what you want. Guys, it's either rules met or rules not met. And now we pushed up to resistance, right? Now the triggers didn't break through. Now those large triggers are trying to roll from a termination condition to give us a full reversal. Guys, if resistance holds and triggers roll and we get odds favorable, are we looking for longs or shorts? Just on the color of the background, guys. Shorts. The trend is down. Does anyone have any rules met for a short right now? Just curious. Maybe you do. Maybe you don't. Gary doesn't have any met. Joel's just waiting. I like it. It's hard to wait sometimes, guys. So here's the next question. And nobody ever wants to admit this. Who went long hoping that that would break? I know you guys hide trades from me. That's okay. Who went long hoping it would break? I'm not mad at you if you did. My checklist says if there's divergence, right? If there's divergence on a 50-50, I'll sit on my hands and I'll just hold on. That's what my plan says. So I was obligated. Daryl, you took it? No worries. Did you have reasons? I imagine you did. You had odds favorable momentum, right? In the moment, the small triggers. Simplicity. I can't stress it enough, guys. Simplicity. We were in class one day, Beautiful, Alan. Great job sitting on your hands doing nothing. We were in class one day and I asked everybody, and this was probably a month ago, and I said, guys, show of hands, who gets their butt kicked on 50-50s with divergence more than they win? And everybody raised their hand. And then I asked the question, who takes them anyway? And we all raised our hand again, guys. Because what if, right? What if it goes up? What if divergence doesn't kill it? What if a 50-50 at a pivot stop out in a market that hasn't been able to establish a clear direction? What if that's the one time that it goes and you miss it? You might as well go become a ditch digger, right? Guys, price reach support. Absolutely no trigger lines have broken through support in this picture, right? I don't care about the gap. I don't care about anything. The only thing that I'm worried about is having a clear path and odds favorable momentum, and I don't have either. Now I've got the small triggers down, but not through the area. I've got the large triggers starting to roll, but they're all the way up here, right? Full bar away. And I don't have any areas all the way up here. So Jose said if there's no divergence, he'll go. Because of the termination condition creating the full reversal. Guys, that's, Jose, that's up to you. But with no triggers through a Fibonacci area, I'm hesitant to believe that area might break, right? Let it break. Let the smalls get to the other side. It means that you may miss out on a little something, guys, or it means that you didn't get run over when support ultimately holds. Do you see how the 5-1 is almost pausing at this key Fibonacci area? Guys, do you hear people trying to make decisions, buyers and sellers? Do I take profits? Do I enter a position? Do I go long? Should I go short? Should I dump 1,000 contracts? Should I buy 1,000 contracts? Guys, they're making a decision at this key point. You don't have to, because you've got rules that have been proven to win more than they lose. You don't have to decide if an area is going to hold because you can identify whether or not it's held or whether or not it's broken. Guys, you don't have to worry about or make a decision and hope that the market develops momentum because you can identify momentum. And you don't have to wonder where the market's most likely to continue because you have an ironclad identifying the area where the market is likely to continue formula, guys. Here it is. Haven't pulled this picture out in a while. Sharks and remoras. Is everybody familiar with the remora? It swims around by the shark. It lets the shark be intimidating. It lets the shark feed, right? And the remora goes, oh, you did all that hard work, shark. Let me take advantage of it. Guys, that's what we are as next-gen traders. We're remoras. We're going to let this guy, this big money investor, establish the momentum. We're going to let this big money investor make sure that there's nothing in the way, that he's not hanging out at an area that he might need to react to, right? And when he gives us momentum, when he gives us a clear path, guys, we're going to capitalize. We're going to take advantage of that. We're going to take our little piece of the pie. We're going to hit 4 singles and it's going to equal a home run. We don't have to hit a home run every time. Got to walk a mountain, walk a minute. I don't know the abbreviation. There it goes, guys. Close the gap, didn't it? Minute. Gotcha. Were you a nurse, Debbie, or a doctor? Medical people speak in shorthand. I grew up with it with my mother. My wife is a nurse. Everything is shorthand. It's so damn efficient. We're still waiting for the area to break, right? It is. It's like watching paint dry. Go walk. Go enjoy. What are you going to do? It's a termination condition. I don't have the advantage of a clear path. Guys, I don't yet have the advantage of a clear path. It might break. It might not. Do we need the magic 8 ball? Does everybody have that downloaded on their desktop so that you can make trading decisions when your rules aren't met? You might as well. And guys, the question is, you can say, well, there wasn't divergence, so I took it from here, and then you got run over, and you said, but I had a mid-band, and then you got run over, and then you put your order up here, and it didn't make it, and you're like, oh, I knew I should have been in right at no areas, just below a thing that might, and I don't know. So then you jump in right here, right? And now you're smacking into support again that doesn't have any trigger lines through it. Not one rule met. And some of you took 3 trades there. I know because I took all 3 of those trades at one point in my life. And when I did it, John Novak was in this room going, you know what? Rules aren't met yet. We're just in a holding position. We're waiting to see if this area is going to break. We're waiting to see if these flat, large triggers more than a full bar away get closed the gap, right? We're not hoping, guys. Hope is not the right way to establish a trading plan. I want to congratulate you guys. You have been amazingly patient today, right? Some of you found some opportunities, took some trades. Most of you sat on your hands and did nothing. Those of you that didn't sit on your hands and do nothing probably didn't post the picture of it because I was in class talking about how you should be sitting on your hands doing nothing, right? That's okay. I used to take trades and I'd listen to John in the back and I would be in a long position and my brain is saying, yeah, here we go. And John's like, man, no more longs, guys. We're into a termination condition. No more longs. That gap theory is in effect. No more longs. You didn't have an area inside of favorable large triggers. And I'm in a long trade. And I take my loss and I delete that picture and I never show it. I never put it in my spreadsheet. I never annotate the chart. And I forfeit the lesson because I'm embarrassed to share it in the classroom, guys. No reason to do that. Let everything agree. So I'm going to talk slowly about the path. Man, go to the beach and do nothing. Go get a chili dog, Ron. It's supposed to be 95 degrees here in the Pacific Northwest today, which means that while all the locals are hiding in the air conditioning, I'm going to be swinging golf clubs out there on a golf course all by myself. Ooh, steamed crabs. Nice. That looks like a good time, Gary. That's one thing that was disappointing about the Pacific Northwest is you would think the seafood would be better here. It's really not. It's kind of sad and lifeless, like the weather. When you get down where John is in Sarasota, seafood is amazing. When you get where Ron's at, seafood is amazing. Even in the Gulf, seafood is amazing. Up here, it's like these dark, dreary, emo fish. Sharks got the good stuff out there. Man, Jose, they do a lot of salmon up here. And they do what's called ling cod, which is like great if you fry it. They've got rockfish, which is like the Pacific Northwest tilapia. Yeah. There is good crabbing. So you'll catch good crab every now and then, but all the shrimp is imported. Yeah, cod, crab, and salmon, that's it. And I don't like salmon, so that pulls one out of the equation, and I try not to eat fried food, so there goes cod. So I just take the crab and put it next to a giant fillet, and then I'm happy. You love them all? I was visiting John over the winter. Yeah, swordfish is great. We were down in Sarasota, Florida, and it was rock crab. I think it's rock crab, stone crab season. Man, went to the local place and like the boats dump it off at this place and it's fresh and the fish is amazing and the mahi-mahi is like 8 hours out of the water and it's unbelievable. It's just different. Not better, just different. But I was pretty disappointed with the seafood here. Joel, no trades today, like you forgot all that you have learned. Joel, can we look at the other side of that coin? You say, I didn't take a trade. I must have forgotten everything. Jose, me too. Mahi and a good chunk of tuna. All right, Joel, let's go back. Are you watching crude oil? Let's take a look. No trade. No trade. This was a 50-50 with divergence. This, I believe, was a 50-50 with divergence, or maybe it hadn't set up yet, right? Termination condition, no trades. Not odds favorable, no momentum. Termination, termination. Maybe an opportunity right here. Maybe a 50-50 opportunity right here. Terminations everywhere. If you were up at 7:30, there was a perfect 50-50 with no divergence. Joel, in my opinion, 7:33 a.m. right there. Whoops. This may have been the only every rules met, no reason to make an opinion trade. And that was it right there. So do you feel better about crude oil, Joel? Maybe you know stuff so well that you followed your rules. Guys, just because you lose, don't assume that you're doing something wrong, right? Joel, this was 50-50 with divergence, but that was a great trade, right? This was 50-50 with a divergence from a bad bottom. Probably not rules met. So you had to be a little crafty, and that's it. Guys, there was so little to do today. So if you're sitting on one trade, if you're sitting on two trades, right? Congratulations. You kicked ass and took names, right? You stuck to your plan. You waited for advantages. If you took 15 trades today, you need to go back and look at them. Did you follow your rules? If you did, congratulations. Your plan's a little more expansive. You're reading your charts well. You're doing great things. Gary, you're up 12.97 even with the morning crash. You didn't get on board till 10. That's awesome. It's amazing. Guys, taking the opportunities when the opportunities are present is every bit as important as missing the opportunities when they're not present, right? Not taking trades into areas likely to hold. Not taking trades in determination conditions. Respecting when trigger lines don't break through, guys. Waiting for every chart to agree. So Joel, if you'll do me a favor and type in the room and say no trades, I did a great job following my plan. That's what I want to hear from you. My rules weren't met. I didn't take a trade. Congratulations. What a great feeling. Guys, talk to yourself like you want me to talk to you, right? Talk to yourself like you would talk to a 4-year-old. If your kid was 5, perfect. And somebody said, oh, you're so stupid, kid, you broke a rule. You would probably tear them a new one, wouldn't you? Most parents would. I would. God help you if you talk to my children like that. Talk to yourself like you would talk to your child, guys. Be supportive. Working in these trades. Termination, no divergence. You chose a spot and went, right? Entry at the area. Jose, entry at the area. Or entry at area. It's at an area, right? But isn't that also an area? Isn't that an area? How did you choose? Right? How did you choose? What made you decide that that was the area that had the potential to hold? Because it's above the midband? Or is it because you let it get to the HVA, right? Why not at the HVA? That's more likely, isn't it? And you're coming off of an HVA and you don't have any momentum and you're in an uptrend, right? And your 21 is at support that's likely to hold. And you've got a textbook termination condition. And what stinks, Jose, is that if this one decides to go down, even though every chart says it's low probability, you're going to believe that you have the greatest trade ever. And you're going to take it again and again, and you're probably going to lose it more than you win. Does that make sense? And I'm not beating up your trade, but entry at area doesn't seem like a rule to me. Entry at area sounds like you're justifying a little bit afterwards. And guys, I'm not beating up, but I want you to really think through it. I want you to think through. So maybe Jose, without this fib here, I love it, right? But right now you're coming right off of a termination condition. If there were no 7260 fib, I would get on with this trade all day long. But you don't have any room. You have 8 ticks to get back to that area that hasn't broken. Is that worth the risk? Because you were risking at least 8 ticks, right? 10 ticks. Maybe you were up above those large triggers. I hope that makes sense without sounding like, guys, your plan is your plan. My job is to focus on advantages, to help you understand advantages, right? But you say sometimes you miss it. It should never be. You should have a solid plan every time you take a trade, right? Every time you take a trade, triggers to go through termination. I hope triggers go through the termination, right? I hope this pivot stop out at a fib doesn't do anything to it. That's it. 440 is not a bad day in a market like today, is it? And then Jose, that termination condition's working right now, right? So far, maybe it closes the gap back to the large. And guys, you do what you do. It doesn't affect my bank account. It doesn't affect the way I sleep at night. But make sure that you have a reason, that you can have a definable feature on your chart that explains why you took the trade. Area to break means that you're deciding an area is going to break. Area broken means that you let it break, right? Trading from an area means you're hoping that area is the one that holds. Trading from an area inside of favorable large triggers with odds favorable momentum and no termination conditions means that you have carefully and calculatedly, that's not a word, put together a plan that has been proven to win more than it loses, guys. And it doesn't matter what your trades are, you should have 100 pictures of them, and at least 70 of those 100 should be winners. And if they're not, why on earth is it in your plan, right? If you're taking trades that lose more than they win, why is that a part of your plan? If you're embracing looks that take away all your advantages, why is it part of your plan? Because you're bored? Because you hate waiting? This is going to be my last thought for the day. Probably not, because I talk a lot. I'm in this for one reason, guys. I'm in this to make money. I don't care if it goes up. I don't care if it goes down. I don't care if it's a home run or if it's a base hit. I'm in this to make money. And the easiest way to make money as a day trader is to have advantages, right? I teach you how to recognize those advantages. It's up to you to incorporate them into a plan. Termination conditions work, guys. That's why it's a part of the plan. All right, that was a preachy ending, wasn't it? I apologize for that. Stand-up desk. Man, that's great for people that haven't had a couple spine fusions. I have to sit down. But that's why I take a break, guys. When I take a break, it's literally 5 minutes of me walking in circles, just taking a deep breath, right? Getting away from the monitor for a minute. Yeah, those uplift, I've seen those. Those are pretty cool. Awesome. Ron, enjoy your afternoon. Have a good time at the beach. Keep searching for those tops and bottoms. Hey, look at that. It just closed the gap to the large triggers, guys. Didn't it? It just closed the gap to the large triggers. Price reached Fibonacci. The large triggers were a full bar away, and it closed the gap. It took it 20 minutes, but that's a pattern that we talk about every day. Guys, have an awesome afternoon. I'm going to wait for my rules to be met, and if they're not, I'm going to get out to the golf course sooner than later. I'll be back tomorrow morning at 9 a.m. We're going to do it again. We're going to talk about advantages. Guys, you're going to post your pictures. You're going to ask your questions. I like that, Gary. I appreciate you being here. Jeremy, it's good to see you in here. Thanks for posting that trade, man. You come back for the first time in a while, and I talk about, I point everything that wasn't advantageous. Thank you for doing that, man. That takes courage to post your trades that don't work. It really does. But guys, it's through that process that you will get where you need to be. If your rules are met, take it. If they're not, sit on your hands. I will see you guys tomorrow morning. I'm going to go shake my magic 8-ball and see if I'm going to shoot in the 80s today. Fingers crossed. Take care, everybody. I will see you in the morning. Be good.